IEC Energy Company is offering Ciboney shareholders almost $8 million to buy their remaining shares, but do they really want to buy them? I'm Kalilah, Reynolds, financial journalist and educator based in Jamaica. So it seems like the ball is finally rolling on the river over at Ciboney. IEC Energy Company, which is the company that purchased the majority stake in Ciboney from Finsac, just launched its takeover bid for the rest of the shares. Back in June, IEC's parent company, Wiltshire Consulting and Advisory, bought Finsac's 72% in stake in Ciboney for 5 cents a share, or almost $20 million. The shares were then transferred to IEC. The remaining 28% is held by other shareholders, and you can watch our previous Ciboney video for a more in-depth breakdown of the buyout. Now, because of the change in control from Finsac to IEC, IEC is obligated to offer the remaining shareholders a chance to get out. It's important to note that Ciboney shareholders don't have to take up the offer, but IEC still had to make it. They're offering 5 cents a share for the remaining 152 million shares. Now remember, 5 cents is what they paid to Finsac for the other shares. But here's where it gets interesting. Ciboney ended trading in September at $1.89 a share and is up 148% since the start of the year. Now that's a dramatic difference between what's being offered and the share's current trading price. So it's possible that the offer is so low because they don't actually want shareholders to accept. Then again, that's the same price they paid to Finsac. But why I say it's possible they don't want shareholders to accept is because IEC also said they have no intentions to take the company private. If they own more than 80% of the shares, Ciboney would no longer be qualified to be listed on the JSE. And that would presumably defeat the purpose of IEC buying Ciboney in the first place. We're working with the assumption that they bought this shell company because it's basically a ready-made listing. They don't have to go through the trouble of an IPO. IEC said they will take steps to ensure they don't own more than 80% of Ciboney or have less than 100 voting shareholders. The offer to shareholders opened on September 22 and is expected to close on October 6. As for how Ciboney will be rebranded, that's still to be announced. According to IEC's website, they specialize in developing, financing, constructing, operating, and managing clean energy solutions. Ciboney's new chairman, Nigel Davey, is also a director at Wigton Wind Farm, and Wayne Ray, who owns IEC's parent company, is managing director at 365 Retail, which operates a Total Energies gas station. So it's quite likely that the company will transition into something in the energy industry, which would make it the third energy company listed on the Jamaica Stock Exchange after Wigton Wind Farm and MPC Caribbean Clean Energy. And that's the bottom line. Ciboney shareholders, are you guys selling, or are you gonna wait it out and see what the new owners do? Let me know in the comments. Take our Investing for Beginners course to learn how to start investing. The link is in the description. Let's get this money.
Let's get this money.